Revenue solves all problems is a very dangerous thing to say in certain types of businesses, especially e-commerce and informational type businesses where LTV is inherently on the lower end and you are trying to increase it. The reason for this is because revenue is normally driven very, very highly by your ad spend. And really what you need to be tracking is not just revenue, you need to be tracking your actual contribution profit. Contribution profit is this equation here. It's your sales times your gross profit minus your cost to acquire a customer, and this is obviously per sale. Your revenue really is just your sales times your AOV, which is why that number can look so large. But when we're thinking about this and we've got a large cost to acquire a customer from something like advertising, it's extremely important to consider how much gross profit we are actually bringing in per sale, and then how much cost are we incurring to get that sale. We've got a bit of a worked example here. And in this example, our AOV is $100. We sell 100 units in a given time frame, could be a day, could be a week. In that time frame, our gross profit is 50%, which is actually relatively normal for something like an e-commerce business, which is trying to be competitive on price. Our CAC, again, is $50, where this is relatively normal for an e-commerce business. You've got a $10,000 revenue, and again, this could be a week, could be a day, but your contribution profit, as you see here, is $0. So you've actually got $0 that are coming through and trying to pay for this operational expense. And the reason that this is only $0 is because your CAC is either too high or your gross profit is too low. And your gross profit is too low because your AOV is potentially too low. Potentially is because you are not getting people to come back and buy again frequently enough, and that means that your CAC is too high. You can literally be making $10,000, $20,000, $30,000 a day and only be scraping by on contribution profit if you do not do the calculation of actually what is your gross profit. In the case of, again, this is especially dangerous when it comes to e-commerce. When you've got informational products and the gross profit is next to zero, then you can afford to spend a lot higher CAC. Or if you've got very, very sticky products in e-commerce where there's subscriptions involved, your CAC can afford to be a little bit higher because you know that you're actually going to pay back that CAC over time. Contribution profit is one of those things that I had never heard about until a few years ago. And then now I actually track this daily. And as well as that, I have multiple calculations that I like to do for businesses that allow me to understand what is our actual unit economics and how much how much gross profit do I expect to get from every bundle or type of product that I sell within the business.